Greetings, Coincall fam. Today is October 4th, 2024. My name is Professor Satoshi, and I'm going to be going over a market update since our last one on, I think it was September 23rd. A lot to go through. A lot has happened and materialized over the last couple of weeks. First things first, I think this is very important to bring up today because this happened just today. We had the non-farm payrolls report. Um, Now, this is not my writing, but a friend of mine who interprets macro data better than I sent this over. We had the September jobs report and exceeded expectations with 254K jobs added versus the 150K expected or forecasted. The wages improved and the unemployment rate fell to 4.1%, which indicates resilience in the labor market. This strong jobs data, combined with lower inflation and a postponed port strike, which happened in the US, eases the risk for stocks, suggesting the potential for a near-term drift higher. However, markets remain sensitive to upcoming inflation data. That's CPI October 10th, next week. That's in 6 days, and also seasonal weakness. Overall, there's a bullish outlook. The components of that include a dovish Fed, China's economic stimulus, and then cash that's being deployed post-election. So this is one data point that indicates there is no recession, even though that seems to be the talk of town on Twitter. You probably see it on other YouTube videos as well. But we're really getting data that tells us there is no recession in the United States. And the more data that we get, I think the more that will be confirmed over the coming weeks and months. On the bottom here, we do have a geopolitical tension. So this week we had an Iran and Israel war escalation. There was an attack. I think everyone has seen this in the news now. We don't quite know what Israel's response is going to be quite at this point in time. It hasn't been very specific. The market is anticipating a retaliation, and it's probably why there's a little bit of a fearful bid. And arguably, this is part of the reason why there has been some de-risking. And we'll talk about the charts in just a second. But I think these are some important data points to go over as we continue with the overall market update. First things first, from an options perspective, what happened with devols? So they actually climbed since our last video recording on September 23rd. And now it seems like they are on the decline. So today was a very important macro print, and perhaps that was kind of like the sell the vol type of moment. However, if you were short vols, you probably did get away with it, depending how you're structured. Obviously, it was quite volatile because of the war escalation, and also prices actually went down. So depending how you structured, we'll go over the trade idea that I had, decided to take myself last time, and how I was impacted. But overall, right now, it looks like vols are going to be taking a breather here. Also on the weekends, that's usually when we tend to get a vol drift or kind of like a vol sap. Vol usually just kind of declines over the weekends as there's less activity. So that there might be a little bit of some of that at play here. Okay, so this is a chart that I had shared last time. So yeah, it was September 23rd. I was trying to think about, when that video was posted, but so September 23rd, I mentioned that I was getting a little cautious, slightly with a slight, bearish lean at those levels of, 64K was my original target from the video early on in September. And I was, ready to just, be cautious. We did end up edging up just a tad bit more. I think we pushed into like 65.5. I'll go over that chart in a second. But, remember that I was going to be a buyer of that dip around the 61.6K level, and my make it or break it was just around 59.6. That's the second lower kind of shaded box that I have there. So those are my two areas of interest for kind of getting long on the dip. That was my main message in the last video. I expected a correction. The correction didn't immediately happen. We did end up, pushing just a tad bit higher to 65.5. I'll show that in just a moment. But the plan was to get, long around 61.6 or around 59.5. So here I have circled the region where we managed to push up. Actually, we tagged 66 and change, it looks like, on this chart. So, but then we did the tabletop that we did in August, and then we went down. Now, I don't know if it's caused by the war headlines. There was other macro data as well. I'm not going to debate that on this. You can debate that endlessly. But what I have my reasons for why I was going to de-risk, and I personally de-risked. We went up a little further. And then we had to move down. So, I did recommend shorting the 65K call. I did get hit a little bit on that position for September 25th, because actually we went into the 65K strike. However, the October 4th position was short 67K, and that one kind of helped me out a little bit because that did expire out of the money, obviously, as we are not anywhere near the 67K call. So, one right, one wrong. Not entirely pleased, but because I could have executed just a little bit better. But it is what it is. Now, the move down materialized, and I think it caught a little bit people off guard. There was a chance for kind of like the momentum to be preserved just a little bit better. We did it, I think, a little bit deeper than what some folks had planned for. But remember, I was always trying to get long around 61.6 here. Well, I think I moved my line down. So 61.6 here, and then 59.5, 59.6, just around where that second box is. And so, we had an opportunity at 61.5. Clearly, that failed, and then we just grazed 60K. We didn't quite get into 59.5. Um, and it seems like the market liked the data today, and we started marching upwards. Now, whether or not this holds is going to be very important for how the rest of October plays out. I don't have a very strong forecast for the rest of October, um, but if someone were to force me to predict, I think this was the kind of like late long cleanse, and we could potentially go up here back to test the highs around 66K, maybe potentially higher, but I'm not too confident in saying that, but I think this was the late long cleanse, and there was a trade to be had. You had about 2 days to get long around 60K, um, and maybe a play back up to 66. So, and that should happen, before the end of October. The reason why October is very tricky because, everyone's saying October, bullish October, and by all means, I'm happy for it to happen. My only risk here is there will be, I think, an U.S. election de-risk where people who are positioned either spot or any derivative options or perp, they're going to want to de-risk some point in time in October prior to the election. And a lot of people are just sitting October out, and that's fine. I think there is still some moves to be seen here, and some traders I'm talking to are just waiting for that October de-risk to happen. I'm not going to wait personally. I'm personally trying to get long this, and I have gotten long this, but I'm not fully. I really wanted to see 59.5K, so I didn't really get full size on for call spreads for end of month October. I'll go through the positioning, but I'm just giving you a forecast. I don't feel very comfortable in these forecasts as comfortable as I was in the prior two videos because October is going to be very, very, very tricky. And on top of the U.S. election de-risk, which we have to really just guess. I was gonna say like middle of October, de-risk. Like we maybe go up for like 2 weeks. Like next week might be positive, and the following week might be positive too. But really that third and fourth week of October is when things sort of get dicey or blurry for me personally. I don't think I'll be actively trading, or I won't be in positions. I'm gonna try to be flat. So there's this 2 week period of playing room, so to speak, maybe even one. Um, I'm estimating here. Obviously, I don't have a crystal ball, but actually so far has been pretty good in the last two videos. So I gotta give myself a pat on the back. Wasn't exactly right to the T, but in general, the ideas are right. So hopefully I'm communicating to you properly that in my head, I think we're okay for a move up here. It seems like it's well underway, although it's still kind of a young trend upwards here because I'm on the 4 hourly, but things seem to look good. Like the bears weren't able to push down. I do think, short term, we're right up at resistance. 62.5K is where I have a resistance level. Um, but, how do we play this? So it's going to kind of be weird because the positioning was supposed to technically be over the last 24 hours, but I'm going to say it anyways. How do we play this? We need to understand where the options data stands. So let's get into the options data. Actually, let's talk about the perps data first. So if you recall in the last video, I mentioned one of the reasons I was very concerned is because we were heading into the trouble area of where the perps data usually faces, some kind of resistance, and that's around that $13 billion open interest mark on Binance. And lo and behold, we faced some resistance there, and we have, since come down. Now let's get into the options talk. Okay, so this is the term structure. I think this is very normal looking. Um, we have basically implied volatilities rising, not too much to report on here. Actually, you know, there's been some chatter as of late whether or not November is is expensive or cheap. Um, it's hard for me to say now because we have this Israel and Iran conflict, um, because that just throws a kind of a wrench because now I feel like there could be a volatile move at any point in time in October if there's some sort of war headline or escalation from either party, and that sends markets in a flurry, potentially down if it's some sort of unfortunate attack, or if they come to a resolution and there's peace, maybe we go up, and it could be a very volatile move. So that's something in the back of my head, and I'm not very. If you asked me in the last video, I would say that vols are cheap. Now I think I'm not so sure. I might not even try to play it from an options perspective. Maybe closer to November, maybe sell the dailies. But yeah, I'm not super convicted of a trade there yet for just looking at this term structure and like determining whether or not vols are cheap or expensive. But this is like a normal looking term structure now. 25 delta skews. You can see the weekly and the monthly, they're pointing upwards. So there's a slight bullish lean for the weekly and monthly outlook. The quarterly and the 6 month out. So those are, like I said in the last video, they're kind of like slow moving right now. They are ticking up though. We did have an uptick today, and this goes back to September 28th. So slowly, rising, which is a positive sign, I think, for bulls. The BTC at the month implied volatilities. So the funny thing is looking at the weeklies here, they just shot down 6 points or so. And this is looking back since actually around our last video, the 22nd, 23rd area. So pretty choppy. You see, like you have to be very quick about it if you're long or short. Um, because you can see, around the 23rd is when we just went down on the weeklies, and this is kind of where I've been focusing. I think a lot of people are focusing on the weeklies because if you're going to try to get long, this is kind of like where a lot of the action is, and arguably the monthly. But the weekly is where I'm personally focused, and this is where you get most of the movement in IVs. And right now, I would just say that we're coming down 6 points because from like, was that 50, around 50? So down 6 points because number one, we just had a macro print, and price didn't go crazy. It did go up, but it wasn't like very, very crazy. Um, so there you go. You have kind of a muted response. And then number two, we are heading into a weekend, and usually, weekly vols drift lower on the weekends, and that could be explaining part of the reason why you're seeing something like this. Okay, so what are we going to do? So this is the coin call options chain for Bitcoin. And personally speaking, I put on not full size because I really wanted to see 59.5K tagged on Bitcoin. So I put on a partial call spread for the end of October. I think this is a safe expiration, and I don't want to really like overmanage this position. So end of October, I have a slightly bullish lean, like I said. I think we do we buy the dip, we bounce. I don't know if all-time highs or 72K is possible this month, but maybe a bounce back up to 66K. So when we did go down, I started accumulating and building a small position of a call spread. Um, and my target is that we could potentially revisit the highs that we put in at 66K. Um, so I bought some 64Ks and I shorted some 67Ks. That was my trade when we were hanging around, the 60K area. Again, it's not a huge trade for me. We're in territory where it's very, very, yeah, like I'm being very cautious right now because we have, a lot of things happening. Part of the reason I sized down as well is because I'm not sure what happens with Israel and Iran. Any headline could send us spiraling down, or any headline could send us spiraling up. So I'm being, sizing down here. I'm not being as aggressive right now. And also, I didn't get my 59.5K tag, which is kind of what I was looking for. The other more aggressive play, if you think we're really going to get a bounce, is like, the October 18th 66K call option. I didn't personally do this, but I'm just saying that if you do have a very, very bullish view that we are trending, perhaps next week expiration. Um, Sorry, is that next week? No, next week would be 11th. So 2 weeks away from today, and it even says there I'm so dumb. 13 days. So 2 weeks away, back to revisit 66K. I think that is fine if you're more of an aggressive trader. Again, we did just come off the lows from 60K. We went to 62.5, so a little bit of R has been removed from that trade. So you might consider doing a call spread. But those are the two trades I'm entertaining. The other trade I like is potentially short puts here. I think the opportunity was really around 60K to short puts at around like 55K, 54K strike. You always want to sell, in my opinion, you always want to sell insurance when the house is on fire, for an analogy. It's because when you're selling puts, um, you want to sell them when everyone's panicking. You want to sell them when prices are going down, and that's exactly what we did over the last couple of days. Um, and I think that was a good opportunity to capture some heightened premiums on a move downwards for puts. So I did sell some around 55K. Again, not super big size. I don't want to overwrite or oversell, especially because there are valid reasons for Bitcoin to go down as a risk asset in the face of these Middle East tensions. So I'm being very, very cautious here. The call from the 52K bottom in September 5th was very, very, I was very, very convicted, and now I'm just being more cautious about the plays because we're in October. There's weird seasonality effects, and we have geopolitical tensions. The macro data is looking good, but overall I'm just trying to lean a little bit more cautious. All right, I think that's all we had for today. Hopefully, I went over everything in the forecast. It's a little bit dicey in October. I think it's going to get a little bit better in November, hopefully. But this is going to be a challenging month, I would say. On top of the U.S. election, we have these Middle East escalations. So I'm going to try to tone down the trading just a little bit. I'm all up for October. I really do want it to happen, but I'm also keeping in mind like there are serious risks to the market right now. So any expectations I have are kind of like cooled off. By all means, send it to 70K. I hope it happens, and I'm positioned for it if it does. Maybe not as much call options as I would have wanted, but um, I'm just overall just trying to be cautious, and hopefully I get that message across to you as well if you're watching this and wondering how to navigate these markets in such an uncertain time. No one likes war. I hope for world peace, and but as traders, we have to try to separate the emotion and try to take the best action given the information available. Anyways, that's it for me. I hope you have a great weekend. Cheers, stay safe, and I'll see you all in the next video. Thanks.